Ladies and gentlemen of the crypto space, let's do this. Wednesday, 12:04 p.m., May 12th, and there's always something new going on. Equities markets are shitting their pants. I account that to Sven wedges. Massive rising wedge. You guys know what I look at with the M1 denomination. People are going to freak out and it'll cause a cascading depreciative cycle. But the trend will play out the same way it did in 2000 and 2008 after a massive capital injection and debasement of money supply. The amount of capital they added to the system makes it basically, it decreases the value. Why? It decreases the value indirectly because now that there's so much more capital flowing around, no one gives a shit. They got so much liquidity, they'll just throw it at anything. I mean, it's more than just a lot of capital. A 25% debasement of the currency in 1 year is a monumental shift, will trigger a monumental shift in ideology. Cash will just be thrown. I mean, I know from personal experience, and you probably all know from personal experience to some degree with your portfolio, if you had 10 grand at the beginning of the year and now all of a sudden you have 100 grand, when you had the 10 grand, it would be, you would think a lot about doing a $1,000 position. But now that you got 100 grand, $1,000 position, oh, psh, just for shits and giggles. Now you can imagine if all those, if you had trillions of dollars, people just throw cash at anything. They don't care. It's like, I got so much cash, I gotta put it somewhere. There's no place to put it. And that's why the equities markets are going to keep doing what they're doing. M1 denomination, we see where things are going to play out over the next couple of years, particularly looking at that MACD cross, man, on the monthly. It's crazy. So you're going to see a drawdown of 3, 4, 5. Whoopie do. When you, it's just, it doesn't mean anything. We see drawdowns like that all the time in the crypto space. They're going to start to see that kind of volatility. And I bet you that Sven wedge breaks down. And what do we see in the crypto space? Fake out, breakout. It'll break down and it'll loop back around and hook back up. But we don't care. We don't talk about the equities market. Well, we talk about the equities markets, but we don't throw our capital at the equities markets because it's an opportunity cost. Way too much opportunity in the crypto space. It's a waste of time talking about or thinking about or engaging with equities markets. Today's topic, manage risk. Don't let misspelled risk manage you. I just cranked this out real quick. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Got Winter in Training in the house. Always a pleasure. Kristen, what are your thoughts on PowerPool? PowerPool is some of the most awesome crypto derivatives that come to mind. Now it falls into the same category as everything and anything that I talk about. Manage your risk. It's the exact title of this stream. My wife just made the most awesome lunch. I'm absolutely stunned at the moment. Gochujang. Awesome. Um, um, so manage your damn risk, guys. 1% of the portfolio turns to 10%. It changes everything. It seriously does. And if 1% gets blown up, it's not a big deal. The vast majority of capital belongs in either cash or collateralizable assets. And this is where my narrative evolution has taken me. Um, risk bets. Don't do farming, man. Stop this farming crap. Krill and polywhale and all this garbage. It's such a waste of your time, and you're just taking too much risk. Sure, you can make money, but that's not how you want to make money. Is that the story you want to tell at Thanksgiving dinner? That you bet 50% of your portfolio on polywhale and you made $1 million? That was the best investment of my life. I bought farming tokens. I bought a meme coin. I bought some doggy coin. It's the stupidest story I could think of, guys. Just, and that's meaningful. If the story doesn't sound good, make it sound good. Because when you hang your hat on a narrative and you invest in a story and invest in a narrative, when everything works out well, then you get to say your story made sense. And then it's a great story to be told. And that's why I hang my hat on monetary policy and I look for critical mass liquidity. I look for the flow of capital because I compare it to the legacy financial system. We have countless years of history saying that when monetary velocity spikes, the economy is strong, it's growing, there's activity, it triggers the emotional reaction for people to engage and interact and seek out aggressively opportunity. And that's what's occurring in the DeFi space. You're watching the formation of nascent financial systems that are mutually exclusive. It's literally like an entire sovereign country spinning up, and that's really Ethereum, Binance Smart Chain, and Polygon. Critical mass liquidity fuels developer FOMO or developer activity. The apps will draw in the retail user base, and then you reach critical mass velocity where people start to accrue capital, start to create money. People create money because they have their principal, their collateral assets, and then they borrow against them. And that's a process that creates money because of double entry bookkeeping, where there's a debt and now there's a liability. So money is actually being created. And that's the way they talk about it in the legacy financial system. And that's velocity of money. And that's why it's so meaningful. Now, the velocity of money in Ethereum's vertical, 340. Think about this for a second 341 Gwei, and it's not subsiding. I know everyone complains about gas prices, but you need to broaden your perspective. There's 341 Gwei, and it's not subsiding. It's not subsiding because people are spending the cash. When you're throwing around $100,000, no one gives a shit about two, $300 transactions. When you're doing $1 million, you really don't care about two, $300 transactions. So you got to remember there's 47 million millionaires globally that don't care about two, three, $400 transactions. They probably don't care about $1,000 transaction when they're throwing around $1 million and they're going to get 20, 30, 40% of their money. So sure, you got to play your hand and means you're not going to be able to engage with certain markets, but don't head down the road of that emotional response saying it's a broken market. No, in fact, it's the antithesis of a broken market. It's an exploding market, and the velocity is downright vertical. And that's Ethereum. Ethereum is working, and these high gas prices indicate that, period. Believe Matic had been hacked years ago, but like Noway says, the narrative changed. The team on the project is so crucial. This is where XDK can shine. Okay, so XDK is a ridiculous protocol. The concept deployed is meaningful. It's useful. It's valuable. Now, the only appropriate way to have handled the situation is risk management and risk tolerance. 1% of a portfolio turns to 10% of a portfolio, it changes your life. 1% of your portfolio goes to zero, it doesn't hurt that much. The only reason persons can have a bad feeling about XDK is because they took too much risk. From a technology standpoint, nothing has changed. This was a malfunction. And if everyone that lost money, maybe it was like 20, $30 million lost, if there was 50,000 people with 1% of their portfolio, fine, 20, 30 million, it seems like a large number, but if it was only 1% of everyone's portfolio, it didn't hurt people individually as much. The pain from this kind of experience is when people throw 50% of their life savings into something and it gets wiped out. So you have to change the way you attack these markets. You have major platforms. You have major assets. Focus on them. Stop buying Krill. Stop buying Doge. Stop buying shit that has volatility and risk. Manage risk. Don't let risk manage you. Gia June, hey Noah, Matic is doing great today. Matic's ridiculous. It was like it hit like a buck and a buck 20, almost a buck 25. Let's look at the chart. This is my play right now. It's going to go to BNB. It's going to go to the top 10 because it has critical mass liquidity and the velocity is basically starting to be vertical. And all the puzzle pieces are coming together as a monetary network to facilitate next level capital management, where there's collateralizability, there's debt, which is the creation of money, and the D apps are just going to keep drawing in capital, drawing in capital, drawing in capital. It has everything it needs to. It would already reach critical mass. It has everything it needs to basically just keep growing and keep doing exactly what? Keep doing exactly what its predecessors did. And the most previous predecessor was Binance Smart Chain. No need to even think about the conversation about Binance and 21 validators. It's irrelevant. What's pertinent was critical mass liquidity, followed by the applications, followed by retail, monetary velocity, fueled by money creation, by the collateralization, and liability process. And we know that works because of, sure, Ethereum, it worked, DeFi summer 2020. And we know that worked because of how the legacy financial system works. So literally what we're doing is we're building puzzle pieces to substantiate how something played out and why it'll play out again, because that's the way it works empirically based on data. Now, this chart looks ridiculous. Let's go out to the daily, please, because this is why it's ridiculous. Now, the RSI is coming down because obviously the market's pulling back right now. But look at this MACD, almost at a signal cross on the MACD. What's fascinating is this breakout that ripped up to 28533 on Ethereum was on declining MFI. MFI is volume weighted RSI. So this divergence between RSI and MFI is extraordinary. This entire breakout was on declining volume, which means the only way you get price action on declining volume is sell side evaporation. Means there were literally just no one's. So buyers and sellers, for the price to go up, buyers need to exceed sellers. So obviously, if the volume is spiking, you got a huge amount of sellers and a huge amount of buyers. But if the price is going up and the volume isn't spiking, that means literally you just have sell side collapse and there's more buyers than sellers. So instead of both going up, buyers and sellers, now you just have less sellers than buyers because the volume hasn't gone up. So what occurred yesterday is a wonderful thing to see. This spread between, in fact, I really want to make an indicator for an RSI MFI spread. And as you can see, the correlation most of the time. Yeah, but look, this is a great. Look, check this out. Look, RSI was high. RSI was going up here, and then MFI dipped, which was followed by a massive Ethereum rip to the upside. And look, the same exact thing. RSI was ripping, but MFI was dipping, which the volume was going down. So that means it was just sell side capitulation. It's the same setup we have here. To top it all off, you have a technical breakout. Next couple of days are going to be quite interesting. I think this is that would be a wonderful indicator, the spread between RSI and MFI, because that would indicate bullishness in the face of decreasing volume, which is indicative of sell side disruption. That's pretty cool. Squanchy's in the house. Always a pleasure, my friend. Frank's in the house. Honored to be in the house. I thank you. I'm honored as well to help as many people as possible. The Jen's in the house. Oof, I swapped my pool for more XTK. Now, as long as you were considerate of risk, I love XTK. It's a ridiculous protocol, wonderfully cordial team, and all that can be done is the best that can be done. It's the same way I work with my corporate work, and that's it. You can only do the best you can do. So they'll pursue remediation and they'll do the best they can do. I really hope the tech proceeds. I really do. It's really cool tech. Killis is in the house. Always a pleasure. Jejun narrative has changed and trending. Yeah, well, my narrative. Well, frankly, there's also a the coupling between equities markets and crypto. Crypto looks very strong right now, and the equities markets are taking a fat technical hit. But you guys know what I look at. I look at this SPX divided by M1, and we go out to the monthly. I mean, guys, do you look at that MACD? We're at market all-time highs, and we finally dipped today. The MACD on the monthly for the S&P looks like it's about to go to Jupiter. The RSI hasn't even come out of oversold since May of 2020. Do you guys see how much money they printed? Based on technicals, the market is going to go 2 to 3x from here. Now, the antithesis, what? The system collapses and the MFI, uh, various international agencies step in, the IMF, whatever. No, the Fed's just going to monetize the debt because they have to. They have to prevent the humanitarian crisis of the retirement age community from losing their life savings because all their value is in this little line right here is everybody's pension fund and everyone's grandma and grandpa and everyone that's retired, including probably Social Security to a great extent. So this little line is everything for our normalcy in society. Could you imagine that? These little lines on the chart represent the normalcy of society. So there's no structural inflation, guys. We're seeing, the inflation print this morning, but there's no structural inflation because there's too much demand for dollars, and that's the way I coalesce the ideology like Steve Van Meter, Brent Johnson, and whatnot. There's a net deflationary pressure. The system wants to deflate. There's too much demand for dollars, and they would have to print hundreds of trillions and quadrillions probably, and just somehow they don't have the rails to disseminate the kind of capital. So the system is net deflationary. So when they're doing this printing, it's not structurally inflationary. What they're doing is reducing the value of the currency. And we see that all over the place. It's a lot of technical indicators, especially the bond market. Real yields are bottoming out, just negative almost in most regards. So this is not like the value of the stocks are increasing. It's just the dollar price point, which is not inflation. It's the decrease of value of the dollar. It's this. It's exactly what I said. If you have all of a sudden an extra, you have 10 times the amount of cash. You're like, fuck it. I'm just going to throw another 2%, 3% here, another 5% here. When you have a whole country with an extra $25 trillion, we're throwing around capital. They're just going to throw it at everything, and that's what'll lead to exactly what happened here. And you can see there was a 104% rip to the upside between March 2009 and January 2010. And look where we are. Look at the MACD. Look at that MACD signal cross and what happened between March of 2009 and 2 years later, June 2011. It was a full rip to the upside. So what happens when this MACD rips to the upside over the next 2 years? It won't get above the long-term moving averages because they just are distorted. They screwed them up entirely. But I expect a couple of multiples to the upside over the next year or two. I don't know anything about Trius, Live W. Noah, my heavily contrary to Ave bet is playing out well today. Ave is major. While I am not overly exposed to Ave, Ave is the money market of the crypto space. They are responsible for a good part of all the monetary velocity that has occurred on Ethereum, and I think they are a systemic component of infrastructure, and they're gonna draw in capital from Cresco Fin and family offices. And you think you're seeing like 15, 20 billion, you think that's big. Wait until you see them at 100 billion or a half a trillion, and probably a lot of dollar denominated capital as well, because the family offices will be deploying that. They won't be deploying necessarily Bitcoin or Ethereum or other crypto assets. They'll be deploying their probably hundreds of billions of dollars, if not trillions of dollars worth of cash, stablecoins. Most of successful BSC projects have moved on to Polygon or on their way, and Curve is proposing issue Curve for Polygon users. Lots of great news. Curve's monetary policy has been one of the most effective monetary policies in the entire DeFi space. Hyperinflation coupled with basically hyper deflation. It just is a driver of activity. It is just fueled activity, and I think it'll be replicated more and more. Fox says, "Hi Noah, do you have a recommendation for securing your Ethereum accounts?" Yeah, ledger device. You need a ledger. What are the guppies? Short-term moving averages. Basically, less than 50 SMA. Short term. So it's real. Guppies are really indicative of either downward pressure or upward pressure. So right now, this is. I mean, this was crazy when the market was. The moving averages are very distorted on the S&P. But point being, or any of the equities markets because of the monetary debasement. So let's go back to the crypto space and the asset of choice that I have going on. This chart is irrelevant. The narrative changed a month ago. Let's go to the 4 hour. So this is dollar denominated. So when you're above the guppies, you have strong support. You have strong bullish support. When you're below the guppies, you have bearish resistance. You have to breach through those moving averages. And that's the way to think about it. And you could talk about the psychology of why the moving averages have that effect, but that's the way they work. Little lines on a chart tell you whether there's more likely of upward continuation or less likely of upward continuation. Think of it in terms of pressure, which is a physical phenomena. Can we touch on Avi? Look at the TA. For a second. Wow. Let's go out. Oh, wow. So it's a failed breakout, dollar denominated. Aave looks wonderful. Aave's a macro asset. Incredible. So yeah, it's bottoming basically. If you see what it did here, so it fell through trend support. It broke down, but now if it pushes back above, that's good support. So it's basically Aave's just getting started. And you're talking about, I'm talking about like the S&P with M1 debasement. You're talking about like this is the start of whatever the price point is. It was a couple $100. Let's take a look. 570. If this is just a start, you're talking about 1,000, 2,000, $3,000. I mean, the whole market's going to double-digit billions. There's just so much cash out there, guys. Um, Critical mass. Howdy, howdy. Wave mappers. Better late than never. Hope you're doing well. Thank you kindly. I appreciate it. John, you had a question? Ask it again. All right, 64 people in the stream, 18 likes. We can do better. Um, oh, hit the question. DPI ETH chart indicate possible DeFi season coming. Double bottom like Wi-Fi. Wi-Fi was ridiculous. It's not going to be just the DeFi season. This is just going to be a radical repricing of everything. There's so much cash. You can't fathom how much a 25% debasement is, and that's the way I describe it. You can't fathom it. You're talking about football fields, or think of like the largest target score you could think of, and fill it top to bottom, with $100 bill stacks, and then multiply that store by 25. That's how much cash they threw in the system. Um, Sonny says, thank you, Noah, love Ave and Matic, also Curb. Oh, you hit. That's my trifecta of awesomeness. You're talking about systemic infrastructure. And that plays into my narrative shift, which I'll hint on before I wrap up for the day. We have a couple minutes. It's still early. Um, so I tell everyone manage your risk, never go all in, never spread too thin. 1% to 10% changes everything. Um, Cash. It's all about cash because cash is stable. Stable coins, you're not at risk. So cash is the risk off play. Cash works in the crypto space. You get 30, 40, 50, 60% on your cash, which is meaningful. Um, Watching Raul and thinking about M1 denominated charts, You want cash, you want protection, or at least you need to know. You need to know how to manage your cash. Because if you can't manage your cash, you, that's the foundation of everything. Because you need a cash account to pay bills. So you need to know how to manage your cash because you don't want cash just sitting around. If you extract like 50 grand because you want to have a bank account so you could run the credit card, cut checks, or whatever the hell, you don't want it to just sit there and lose value in a bank account. You want your cash working. So the value of a cash account is undeniable. And in the crypto space, cash works. So manage your cash and manage it in the crypto space and get money. You earn your money. You got to outperform 15% a year. Otherwise, you're just losing everything. You're just getting totally taken advantage of. You're not outperforming the market. You're not outperforming the debasement of the currency. And the debasement of the currency is going to proceed because they have to protect retirement age communities or the retirement age population. And we're not getting the structural inflation. So the debasement's going to continue because they can't let the system implode. What they're probably going to do is pursue alternatives. Digital yuan, digital dollar in the US, merging with the decentralized space that has vertical monetary velocity. But I also expect M2 velocity to absolutely surge and go vertical, which is why that MACD on the monthly denominated in M1 on the SPX is going to go vertical. So this all takes time to play out. Manage your cash. If you don't know how, learn. Curve, Aave, Yearn, if you see so fit. They're a major at this point, and you, everyone in Discord is getting pretty good at collateralizing the major assets, the macro assets. So Bitcoin, Ethereum, and Matic at this point for myself. So there's volatility. Assets go up and down. Um, so I've often talked about pairing with USDC as a great means of managing volatility. Let me describe the two things that I see now. So when you pair with USDC, you're directly suppressing the volatility on your principal because your principal is the total dollar value of your LP position. And you're going to cap upside and limit downside with the dollar stablecoin pairing. So you're managing the risk or the volatility, which equates the risk in many regards, directly on your principal. But there's an indirect way to do it also. So instead of pairing, let's say, Bitcoin with USDC, you take your Bitcoin and it's in MakerDAO or Aave and you're borrowing cash, and the cash you put in the curve. Don't fucking farm with it. Cash on the curve, and the cash is earning yield. The debt costs 5%, let's say, from MakerDAO and RenBTC. And let's say you have a curve position, so you got max boost on like a GUSD pool and you're earning 30, 40%. So your cash and carry is 25% on your dollars. So you're earning 25% on your borrowed capital against your collateral asset. You're managing risk. That is a risk management strategy, and that's the evolution of my narrative right now. That's the indirect way to manage the volatility of the asset. So you have LP positions to directly mitigate volatility of a risk-on asset, and you also have the combination of debt and the current forex markets and yield on cash. So that also manages the volatility of risk-on positions. And then Bancor comes in the mix also with their impermanent loss protection, which is a third reality where they propagate the volatility directly into the monetary policy of the platform, which is extraordinary. And what's interesting? I see that as a derivative asset, because the way I just described it, you could do it with Uniswap V2. V3 is a whole different story, but the pool paired with USDC is a balanced pool. So you could do it with that type of approach. You could do it manually and with borrowing and earning on your debt. That's the way you could do it manually. And then Bancor has built those two mechanisms directly into their monetary policy and the platform. To top it all off, they added the vortex, which is a burn component. So they have an extraordinary monetary policy. This is just really cool monetary policies in the crypto space, and I think of them as compared to like the U.S. dollar monetary policy. It's just stupid. The monetary policy of Doge is horrible. It's hyperinflationary. Now, I did mention the other day that Flare could change all of this. That doesn't mean invest in Flare, folks. There is no Flare asset. It doesn't exist. So if you buy those the futures, you're literally taking risk. And I tell you guys all the time, stop taking all this risk. So Flare doesn't exist. I'm talking about it from a technological standpoint, and it has the potential to release the equity or alleviate stagnant equity. Doge is stagnant equity. XRP is stagnant equity. You can't do anything with the asset. DGB is stagnant equity, and the list goes on and on. If you cannot take your asset and get money out of it, borrow against it, it's stagnant equity. It's not derogatory. I'm not saying it in a bad way. I'm saying from a money management way. The capacity to take equity out of your capital is a process of money creation. It's what manifests monetary velocity. It's what fuels the entire real financial system. It is why Ethereum is doing what it's doing. It is why Binance Smart Chain is doing what it's doing. And it's why Polygon is just starting to do what the other systems have done before. Borrowing against accessing equity and borrowing against a collateralizable asset is rocket fuel. Just remember that. Let me answer some questions. I'm going to wrap up the stream. Craig, my man in the house, repricing will be insane when fundamentally sound projects get the spotlight. Lots of BS getting the limelight right now. Yeah, DeFi summer's coming, guys. And they just printed too much money. Everything's going to be repriced 10x. You're going to have count the entire top 100 is going to be double-digit billions. Stop. Wait. They're just sure you can make money with Doge and Shiba and all that garbage. I can't. I'm not interested because it's a stupid story. I'm not that much of a capitalist, and my hands are going all over the place right now. I'm not that much of a capitalist. Sure, I'm a capitalist. I want to capitalize. That's why we're doing this. But if I can't tell a good story about an asset, it's just a stupid story. That's the worst reason to allocate capital. Killis, what do you best way to learn our way of DeFi? Small amount of cash is to not swallowed up by fees. I've been watching videos, can't quite find my footing. Well, Ethereum is going to kill everyone with the gas prices, and I expect them to keep going up. 434 right now. Wow. You're talking about probably $500 on Uniswap for a transaction. You guys aren't going to be able to do anything. And I have no interest in doing anything. I probably have like $2,000 worth of Ethereum right now, and I'm not going to do anything with on Ethereum because it'll just be gone. Now, clearly, for the better part of the last year and a half, it was all on Ethereum. I think on was it fees.wtf? I think I'm up to like $400,000 worth of Ethereum fees. Now, clearly, that's because Ethereum is dirt cheap. But that's how much it's worth now in dollar denominated form. Polygon, Polygon, period. Now, clearly, there's other platforms that are going to grow, and my eyes are on Solana, Avalanche, Phantom, predominantly. Flare, I can't wait for the end of the year. But it's not like I'm investing in them. I want to use their systems. And even Cardano, great. I have no interest at all in buying any of them because they don't have critical mass liquidity, they don't have the explosion of developer activity, and they don't have critical mass monetary velocity. And of all of those right now, the only ones I have value allocated to are Cosmos and Polkadot. Food for thought. Noah's very familiar with Warren Buffett's theory and practicing it in the crypto markets. This is all about Buffett's theory. You got to make concentrated bets. Never go all in, never spread too thin. It's my take on Buffett. You have to find a solid narrative and you have to hit it and hit it hard. Because if you're just trying to capitalize on some bullshit doggy coin, you're not learning from the smartest people in the room. You're just capitalizing. That's some day trader bullshit. And no day traders ever made it big. Sure, you got hedge funds that do well, but the ones that do really well hang their hats on narrative. Raul talking about macro financials. You got to understand the macro financial system. There's no difference between the crypto markets and equities markets. Find your stories. Tell your stories. And when you find a story that you could tell at Thanksgiving dinner that sounds awesome and it made sense, you found the right narrative. Let's keep going. John said, Craig, you're right. People keep buying coins from 2017. They have no idea what they're doing. They don't have a story. They don't have a macro perspective on the markets. Allegiances, Aave, Maker, ALCX are my favorite sources for borrowing against collateral at the moment. Fingers crossed I can start earning curve on Polygon. Aave, Maker, Solid, was it Alchemix? Alchemix is basically urine. It's a derivative of urine. Sure, I love Alchemix. I do. Uh, Anything that's new will carry risk until it's time tested, mother approved. What was that from? Time tested, mother approved. Anyway, but at this point, Aave and Curve are time tested, and Uniswap's time tested, and Bancor's time tested. So stick to the majors and stop taking risk. Do you recommend pairing LPs with USDC at average, local highs, or local lows? Well, you're talking about like an entry to an LP position. It's not something I think about much. What I think about is my exposure to different parts of the market, and my portfolio is a manifestation of how I see markets, how I perceive them, and I want to place my capital in front of where I think the capital will be. Food for thought. Craig, John McGuire, it's to be expected. People new to the space have no idea what actually being built. Tokenomics that exist, that they see coins and prices. Tokenomics is short-sighted. I get a kick out of this. It's more than tokenomics, guys. We're talking about monetary policy here. These assets have all the properties of currency. And this is different than like UTXO. Staking and emissions and mining, where you have it's decaying inflationary or disinflationary or just inflationary, hyperinflationary like Doge. This is more than that. This is in DeFi. You have monetary policy just like any other currency because you have inflation, you have deflation, you have velocity, you have money creation because of the money markets, you have forex markets. You have the exact same infrastructure as any financial system around the world. Period, guys. This is real deal shit. This is not the joke crypto that you heard from John at the water cooler. This is some real shit. We're talking about literally the creation of monetary networks here. Because if they walk like a monetary network, they talk like a monetary network, there's no damn difference than a sovereign fiat money system, like the US economy. Um, Jashansky. In spite of the market exploding, do you see Bitcoin as capable of ruining the party? Feels like a very real chance. What's ruining the party mean? It's a collateral asset. You have Bitcoin, you could borrow cash. If the price goes up, you could borrow more cash. If the price goes down, you could borrow less cash. Put that cash to work. Stop thinking about the price of Bitcoin. The price of Bitcoin is irrelevant. What's pertinent is the function of it and the fact that cash works in the crypto space. So collateral assets, you borrow cash against them and you earn 30, 40, 50% on your money. And that's working. So you're putting your equity to work so you don't have to. Killis, you're very welcome. Do you plan to hold enough Matic to collateralize it? I currently collateralize Matic. It's Polygon. I got my Matic on Aave. I borrow cash. I put my cash on Curve. My cash is working because all the degenerates on the platform are swapping and doing whatever waste of time they're doing, trying to get a buck and claw a buck. And meanwhile, I'm the bank. Be the bank. I want to sit back with my feet up and let the degenerates gamble. And sure, I want to provide them liquidity. So I'll be sitting back with my feet up in the margarita at the house, and they're trying to make $100 a day. Meanwhile, I'm the one who facilitated their transactions. So be the bank. That's the goal. No, what's your thoughts on XTK? Check the beginning of the stream. I talked about XTK. I love the tech, and they will pursue remediations as best possible. And I really hope the team proceeds. It's really cool tech. What's up? I'm late. Drizza in the house. Welcome. Craig says I understand that. That's just putting those characteristics onto the umbrella term of tokenomics due to the character restrictions. Character restrictions. What is this? Twitter? My man. No, I know of all. I know you know that, but I still gotta say it so everyone can know it. Gia June, what's your leverage ratio on BTC? If it was in MakerDAO, it'd be 400%. If it's on Aave and Polygon, probably around two and a quarter, two and a half, particularly because it's so damn easy to move money around. You put your cash in Curve. If I need to pull some cash out and put it into Aave to rebalance the whatever, that number, the collateralization ratio, it takes seconds and it costs nothing in transaction fees. So, yeah, 10% would be safe guess. You could do more. You know, you're talking 25%. You get access 25% of your equity. But watch that number and just be look. Gas prices are 430 gwei. If you got $1 million worth of Bitcoin and you borrow $250,000 on MakerDAO and you throw that on the Curve, that alone is going to probably cost you $1,500, $2,000 today. And then if you need to pull cash out of Curve, those smart contracts are expensive. It'll take you $2,000 to pull your cash out of Curve, and then it'll take you another $500 to $1,000 to repay some of the debt on MakerDAO. So I don't know, man. It's impossible to do this shit on Ethereum L1 right now, unless you have millions and millions of dollars. But here's the kicker: the gas price is at 430 for a reason, because that's what's driving the market. I know you folks are hating on Ethereum, but Ethereum is probably one of the most profound um, systems on the planet right now. The gas price is that high because the millionaires are they're doing exactly what I'm saying. They're not working with small portfolios. They're working with $50 million portfolios, $100 million portfolios. They don't stop for a second to think about $500 transactions. Food for thought. Winner in trading, learning from the smartest people in the room is exactly what we are here to do. That's why I asked about Zero X. Love to hear that level-headed take on the tech. Zero X is awesome, awesome tech. I'm not too interested in taking a position from a tech standpoint. It facilitates transactions and and just the entire nature of a capital exchange and asset swaps. It's the market's going to be serious in the coming years, and they'll be part of it. It's just going to take time, and there'll always be front runners, and there'll always be laggards, and there'll always be people in the middle. But Zero X has some serious, serious infrastructure. Not something that I'm interested in applying value to. FM Alexander, thoughts on TrueBit? No idea what it is. Powder Monkey are putting cash into Aave-O-Matic. Cash is king. Put your cash to work. Cash should be earning 30, 40, 50% of it. If it's not, you're missing the biggest opportunity in the DeFi space. Collateral assets you can borrow against to put cash to work. So your collateral assets don't have to be stagnant equity. That's the biggest problem, stagnant equity. Look at if an asset is stagnant equity, it's no different than 17, 18. If Flare doesn't come along to facilitate Doge becoming a collateralizable asset, the same exact thing that happened in 17 and 18 will happen again because nothing's different. Nothing is different. USDT 37% on Aave. Yeah, it's pretty cool, but bear in mind, look at the borrow costs. I'd show you my Aave page, but then you'd see what kind of cash I'm working with nowadays. 12:48 p.m. on a Wednesday, May 12th. Thank you all for joining. I've been horrible with office hours, guys. I promise to do better. Ping me on Twitter. I'll do the best I can. Jump on the Discord. That's probably the best place to grow, to learn, to ask questions, to figure out how to do better. It's a whole group of people that are trying to do better right now. It's a big deal, guys. There's a next level and there's a better way. and it's not just what to buy. It has nothing to do with what to buy. The first thing to do is improve how you look in markets and how you understand the systems that play and how you compare these things to the status quo. And they're extraordinarily analogous. They do the same thing. And that's why they're very understandable and relatable and in many regards predictable. So I wish you all a wonderful day. 70 people in the stream, 33 likes. We can do better. And I will see you guys tomorrow. Peace.